Hey everyone, John Henry here, and today in the market psychology video we have an inventory day. Gotta love those inventory days on crude oil. Yesterday we had a very nice run up through the highs there, and we even ended the day with bullishness, meaning that the buyers were still looking to stay into this thing, and they opened up with a very small, albeit, but a gap higher. And that gap higher was met with immediate bullishness. So the buyers are definitely happy when they open up today. They're buying into yesterday. They've been buying pretty much yesterday, most of the afternoon, or at least ever since around 12 o'clock. And then they go into today with a small gap up and more bullishness. That's going to make for some very happy buyers. So you will have buyers that just exit, right? They're going to take their money off the table, call it a day. And that's going to cause a little bit of a pull down. Other buyers are going to wait to see what happens. We had a very strong bull start to the morning. Maybe this continues up and just keeps driving higher. So they get a little bit greedy, right? And they hang on to it for a little while. So we open up strong bull into no continuation, right? Completely turns back around. That's going to make all of the buyers that did take their money right at the open very happy, and it's going to make the people who are a little bit greedy a little bit nervous now. They're like, I missed out on an extra 10, 15 ticks. Now I feel like an idiot, right? If it comes back, I'll just get out. And that's going to cause a reason for when it comes back to those highs, you're going to see probably some resistance there. And arguably you can sell that because as soon as it hit it, it drove right back down. Now, I don't have it marked, and the main reason behind that is you can see how choppy and nasty this got inside here. We couldn't even break out of that first 5-minute bar, not until we had the news or a little bit before the news. So that's a really big warning sign of you might want to be a little careful, right? Eventually, we'll probably break out of the higher low and the news will probably be the thing that does it. And if it doesn't, well, it might do it a little bit before then. So you've always got to play it a little bit cautious and understand that this is probably going to be a range sentiment until we get that breakout. So you're looking to buy low and you're looking to sell high, and any strong move in one direction is probably going to be a failure. So we have a huge bear move down, engulfing, right? It completely engulfed that prior candle and closed on its lows. On a normal trending day, that would be a beautiful reason to sell. But context is the most important part here. This is not a good trending day. This is a range day, and this is a sell setup that's happening at the bottom of that range. This is very likely going to be a trap. So you can buy into that trap knowing that you're likely going to get a move right back up to those highs, and that's exactly what happened. You trap in the sellers, hit all of their stops, drive that market back up, and slap that resistance right at the top. Now, this is another one of those big moves, right? We have a huge move, and there will be sellers that just sell it, right? They're not even going to care where it ends up. They're going to sell it. And that is a way into that market, but we're not at the highs of the range yet. We missed the highs of the range so far, so maybe wait for a little bit more information. You get a little bit of an attempt to push through. They can't even really close much above the range before seeing the sellers come right back in, and that is a beautiful reason if you have some risk capital, because you are going into the inventory number, but a good reason to sell, driving that market down. Now, if you did hold through the inventory number, which, by the way, isn't recommended, you had a very huge move down, big old move down, and that's going to signal an obvious breakout to the downside. The bears are firmly in control of this. Absolutely no reason to be a buyer anymore. You're waiting for the buyers to fail, and you're looking to go toward the sell side. We had the buy bounce right here at the bottom. Not a big surprise with that kind of a move down. There are going to be a lot of sellers. Maybe they sold that. Maybe they sold somewhere inside this candle, but they're going to be taking profit off near the bottom there. So you're going to get a little back and forth, chop and slop. Again, now that we know the sellers are in, wait for the buyers to show up and wait for them to get stopped out. Buyers show up once and they show up again. We know that they're getting into this because it's very obvious. It's a place where range buyers are probably going to buy, but they're not doing very well, right? As soon as they're triggered in, they're immediately wrong. Not a single one of these positions for the buyers was profitable from the start, and that's a big red flag. So that tells us we need to be looking for the short side. We get that big bear rejection back down, and that is a beautiful reason to jump into the sell side for a quick scalp right back down again. So just a phenomenal combination of market technicals, technical analysis in combination with that market psychology for a phenomenal 1-2 punch. And that's going to do it for this one. So hopefully you found it useful. Hopefully you learned something, and we'll see you next time.